Hey guys, welcome back to our channel. Hope you have a wonderful day. In today's video, there's a question that was being asked on a social media that was somewhat interesting, relevant to our topic. The question goes, if you had $100,000 to invest through ETF, how would you go about it? I'm thinking of $5,000 a week for the next 20 weeks. So pretty much $100,000, would you do a big lump sum or would you do a dollar cost average? That's another way. So if I was starting at that particular amount, this is based on my personal experience. Please do not use me as a, like a data point for when you're starting. So it might be a bit different when you're starting. The market might be going up, maybe going down, going sideways. I don't know what it looked like, but this is based on our personal experience as well. So if I were to do it all over again, probably I would just go on Vanguard Index Fund. In Australia, there are 3 different index funds that is so in Vanguard alone, and that's what we did. That's what we started in as of 2025. Open up a second account, and we're just going to invest in those 3 over and over and over again. So the first one will be VAS, because VAS is actually just, well, if you read the description alone, it's just VAS, invest in Australian largest ETF and gain instant diversification with exposure to the top 300 companies in Australian Stock Exchange. So that's where I start. The first 300 are the best of the 300 companies in Australia. Second one would be VGS, the same thing. International exposure up to 1,500 companies from major developed countries, excluding Australia. So Australia 300, the best of Australia 300. This is based in Australian account, by the way. VGS, because you can expose it to 1,500 of global market, let's say, developing countries, developed countries. And then the third one would be the VDHG, access over 16,000 Australia and international shares and fixed interest securities bonds through a single investment. So overall alone, if you have the capital, the seed fund, or a big capital, I would go through in those 3. But that's me. This is based on my personal experience, my personal finance. Don't use me as a data. This is just based on personal experience. So the reason why I chose Vanguard is because, well, number one, there's no brokerage fee when you buy Vanguard ETFs. And overall, nearly 50 years of index fund experience. Vanguard, from my understanding, based on my research, it is one of the eldest. That's what I like about it. And after you hit that $100,000, you probably don't have enough money. And if you don't have any more money, then you probably only have a small capital. What I like about it is the fact that you can start from just as little as $200, and auto investment can be created as well. So for that reason, that's the reason why I choose Vanguard. Starting in Vanguard Index Fund, 3 simple steps as per on the website. So number 1 would be opening up the personal account, choose the index fund that you actually wanted, and then start putting down whatever capital that you want. So overall, if I were to have that $100,000, probably do the whole entire lump sum, split it into 3 ways. However, if you're happy to do dollar cost average, which is, for example, in this question will be $5K a week for over 20 weeks, then by all means do that. This way, I like them both. Okay, if I'm new, I'll probably do dollar cost average. Split it into 3, small amount, $5,000 account per week for over 20 weeks. It's because of this. During that time, over that every week, you look at it, you put it down, you put it in, and there's a lot of psychological thinking involved with it, and you can go through, okay, your emotion that comes with it as well. So you look at, okay, one account is growing and this one's not growing. You look at the historical data, you do your own research, and see if it's panned out the way you want it to be. On the other hand, if you are already experienced and if you have $100,000, then definitely I would just dump it into 3 as quickly as possible, because the earlier start that you can do, the higher potential of it can grow a lot more faster. Both of them, There's no right or wrong way as long as you're taking an action. So it doesn't matter which way as long as you're taking action. But yeah, that's just based on my experience. And this is what I'm doing as of 2025, opening up those 3 accounts. That's just my 2 cents as well, guys. If you like this type of content, hopefully this helps you in any way possible. Don't forget to subscribe, comment, and I will see you on the next video.